TGIF Warriors. Hi, Jace, Hugo, Galaxy. How are you, my trading warrior brother? And how are you, Ryan?
Okay, mate. You? Happy Friday?
Pretty good. Made it through another week. Yeah. And I have a hello, Mark. Welcome.
Oh, all the way from Kenya. Wow.
Yeah, we're international. Second 2-week reversal in a row in WTI. Who had a good week? And what instrument did it for you this week, guys? Hi, Dominic. So, Ryan, let me ask you this. What do you think the most in no retracement? Okay. Silver, Jay's caught the silver. What do you think was the most important move this week? Market move. Ben, I saw wheat, Ben, looking good.
Yields,
do you think beans and corn have also bottomed? Hugo? Okay. Yeah, we got under 12 in the beans. So Ben likes, the Fed can't print corn. Hugo had a great week. Congratulations, Hugo.
Yeah, well done, Hugo. Well done, guys. Always good to see
you. Nice to hear. We root for you, unlike a lot of places where people would be jealous if others had a good week and say they didn't. Glad for you. Okay, so Jay's had a great week in silver. And look what is containing it. I don't think it'll contain it for long. Tim, congratulations. They were big moves. So there's your weekly in silver. Looks like we should get to 28. The question I still have is I don't think the yen is done. So there's your daily. Still was a pretty good week. That's a pretty nice candle. So, I still think we're headed higher. I don't think we're going to get a test of a breakout now. If we do, there's something wrong. Should just continue to higher levels. All right. Well, how about you, Stel? What was the biggest market event for you? Was it silver and gold?
I think, good morning, everybody.
Good morning.
Obviously the U.S. inflation was the big mover of the week, and metals. I mean, I have metals, and I had a very good week, and I think they are the ones I'm watching at the moment. Granted, yields are trying to go higher as well, but we all know the short-term effect that rising yields and the rising dollar have on metals, which is negative. But I stress the word short-term because really, at the end of the day, I've said this so many times. When you look at medium term, and by medium term, I'm talking about months or more or years, then really what the only thing that I think affects metals prices is supply and demand. They kind of steady. There's no mining of asteroids or or anything like that. But and then the main thing that moves the price is really money supply and the purchasing power of the currency and the dollar in this particular case. So that's why I really, really like these trades. I think they are going a lot higher in the medium term, but you have to be very patient. I have no leverage. If you have a deep leverage, then you're going to get stopped out on some of these moves, and they can move quite a bit. We've seen this. This is what I'm looking at. And for me, the main picture has not changed as long as yields are around these levels and the dollar is not. The dollar is rallying, okay, but it's not breaking out. The Dixie above the 96.10, I think, is going to be a breakout. And then
whoa! You don't think we're breaking out?
Well, it depends on your time frame.
Okay. We're at new 2021 highs. I mean, what other time frame do you need?
2021, Yeah, I agree.
Yeah, I mean, if you're looking on a 10-year horizon, the dollar's not breaking out. But I mean, if you're looking at this year, I mean, we're at new highs for the year. I mean, and we've been consolidating all year. So, what are you talking about, man? What you talking about, Willis?
So Blake, what do you
that's
think
an old
major
joke.
upside targets are? I know that you just did an interview about the milkshake theory, and they're looking for numbers that are astronomical.
I'll talk about the dollar here in a little bit. I want to let Stelios
hang himself some more.
Well, yeah, like let's hear what you got to say, man. Now I'm listening.
No.
Yeah, on my weekly chart, the main line I have is 96.10, which is a 50% retracement of the move lower. And
and you've had that for 6 months or a year.
Yeah, and I think we're going lower, but I think we might. I always said we might squeeze a little bit, and I now think this is probably the most likely scenario. Now, if that gets taken out and we keep going higher, then okay, it's a different ball game. But I think that is really the place to where I'm going to make my next decision, basically, for the dollar. So. We have a different time frame to you guys, and yes, I agree, Blake. It's 2021 highs. The dollar's been doing very well, and you said it. You said it a little while ago that everybody's short the dollar, and everybody thinks the dollar is going lower. So where is it going to go? Path of least resistance is going higher, and you were right.
Well, and I think I think most of us at the beginning of the year last year realized, well, for two things, every bank was bearish the dollar, so that's that you had to raise an eyebrow there at first, but then everybody was talking about, the Fed is doing X, Y, and Z and doing all putting all this liquidity in the market, and I mean it didn't take me very long, and I'm assuming it didn't take, well, it took all year for people to finally figure it out. But when everybody's looking around going, wait a second, the Fed's not the only central bank here, expanding their balance sheet, and so that kept the dollar more sideways than anything. But as the year has gone on, I think more people have come to the realization, including myself, probably about the summer is when, everybody starts talking about inflation is moving higher and the inflation is moving higher. This, again, we're talking around summertime. We started had more shipping problems and issues, and people started thinking, oh, well, gosh, every central bank is still adding more liquidity. Then at that point, people started to realize that it's really the Fed that's going to be able to move the most relative to what they've done in the G, let's just call it the G, 5, G7 universe. So I think that's why the dollar is really moving higher, because it is in all actuality right now, it's especially based on what most people will say, it's the one central bank that's actually can move more than any other central bank, and make it happen, because the U.S. economy is doing quite well. Like I keep going back to Ryan, what's his name that you recommended I talk to from Caxton?
Michael Brown.
Michael Brown, he's so funny. When I was interviewing him, and he said, you look out my window up here in this building. When you see pigs flying, that's when the ECB is going to raise rates. Still laughing my butt off about that, because it's most people's opinion right now. And I was just talking to Chris Weston of Pepperstone. And by the way, I know I keep talking about this show that we've been doing, and that's actually the first one goes live. That we just filmed the pilot apparently, and the first one goes live this next week. Anyway. But
how many seasons is it going to be? Season 1, season 2?
I don't know. That's what they're calling it. Look, I'm just a pawn in this whole show that they're doing. Anyway, the fact of the matter is, he was just telling me, like, the expectations of what the RBA is expected to do, and he's like, get the hell out of here. There's no way the RBA is going to be able to raise rates 3 times going into next year, and or I forget what the number that they're looking at. Anyway, point being, dollars breaking out. Now let me take over really quick, and I want to show you something, because I do agree with you, Stelios, and I was just giving you more of a hard time because
you love doing that. I know.
I know. It's,
of course,
it's my thing. It's my
It's his hobby.
It's like, I mean, if I wasn't here to give you and everybody else a hard time, it'd be boring. I mean, gosh, somebody's got to point out that Ryan has no hair on top of his head, and neither do you. I mean, somebody's got to point that out.
I'm fine at pointing that out myself.
Anyway, okay, all jokes aside. Look at the dollar, though.
That means that those guys have too much testosterone, which, at my age, I would trade. I'd give up some hair.
Hey, you know what, Dale?
You'd get this saying, Dale, grass doesn't grow on a busy road.
Nice.
That's funny. That's a good one. I like that. Yeah. But I'll say, Dale, you do have some nice hair, man. You got a heck of a head of hair there for being
an old
462 years old.
How many centuries old?
All right. Jokes. Okay, let's stop it. Stop. I'm going to stop. Let's stop. Okay. All right. So here's the dollar index, right? And the dollar index, like I said, because we're at the 38% retracement and we were knocking our head up against their, the last, few months, but really just kind of knocking our head up against it. The breakout this week is the difference between the dollar index was, and I'm just going to draw this out for you guys. For those of you that don't listen to the week ahead video every week, the reason why this is such a big deal, and let me change this a little bit. So the 38% retracement is really what gets people excited about continuation patterns. The likelihood of a continuation pattern of a trend is very strong, or it's at its strongest point at the 38% retracement. Okay. And so once you break above this 38% retracement right here, right? Once you break above that, then the risks of not fulfilling a bearish trend become a lot higher, because once you get up to the 50% retracement, or especially the 618, then you're at risk of a longer term trend. So, if you, going back to what Stelios was saying a little earlier regarding, the dollar index is, really not trending. It really isn't, but it spent the whole year below that 38% retracement. And now that we're above it, that kind of dashes the hopes for all the dollar bears. It really does. Like if you were a dollar bear and you're like, the dollar's going to hell and it's going into the 70 handle again, and we're going to see that. We haven't seen that in decades, and we're going to do it again. Well, after this week, they probably stuck their heads in the in the sand like a bunch of ostriches at this point. That thesis almost kind of goes out the window at this point from a technical perspective. That doesn't mean that the dollar won't ever go down. It's just right now, the likelihood of the dollar index now being more of a range type of move is a lot greater, right? Instead of being the dollar, the people that were yelling and shouting that this is the death of the dollar, and you heard them. Look, you could go back. For those of you that watch YouTube, go onto your history, your YouTube history, and go sit. And those of you that watch YouTube on, financial stuff on YouTube, go sit and look at your history and go watch those videos of those people that were calling the death of the dollar through the COVID lockdowns and all of 2020 and 21. Those are the people that you're not going to hear them talk about the dollar anymore, because it's completely gone, upended on them. So, this dollar move I think is pretty big. And this is the one thing that really has worried me about being too bullish the dollar. Now I want to bring up I'll stop here. I've got a couple of things that I want to talk about going into the weekend. It's a slow day today. We do have inflation expectations from the University of Michigan. Ryan, there's another piece of data you think you're going to be looking at going into next week, right? Or going into today. Okay.
Yeah,
tell us why that.
It's part of obviously the employment situation in the US, something we'd be looking at. We've been seeing these job openings, rise, even while the NFPs haven't been coming in that strongly in terms of actual jobs numbers. So we've got this big gap between those who are still unemployed and those coming back into the market and the amount of openings. So what I'm looking for, if we're going to start seeing the jobs market get really strong, because it's strongish at the moment, but are we finding jobs out of the diminishing pot of people, if you like, because there's still so many people not in the labour market. You know, we talk about the participation rate. So JOLTS is a way of seeing that. If we see the number come down, job openings falling, that, you know, in normal times, that's seen as a bad thing, but in this time it might be a good thing if we're seeing hires pick up, because that means that people are taking those jobs that have been, you know, sitting vacant for a long time. So that's what I'm looking at for the JOLTS numbers. It is a bit lagging. It's for September, but it's just another picture, and that's what I'm looking for to try and gauge the overall health of the jobs market, which to me is a little bit problematic at the moment.
Okay, that's definitely worth noting. So thank you very much, and that's something I wasn't even looking at. So, Stelios, is there anything that you're looking at today that we should be paying attention to?
Not really. I just want to see how yields continue from their. I remember they were closed. The bond markets were closed yesterday, so I want to see how they trade today. But I don't think we could expect anything major today ahead of the weekend.
Well, okay. So let's talk a little bit about the weekend, and I want to talk about this weekend just because I made mention of this to our traders that are in the ForexAnalytix community earlier this week. One of the guys that I traded with for the last several years, his name, well, I'm not going to tell you his name actually, but him and I were texting earlier this week talking about, you know, the euro and blah, 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 blah. And, you know, as I talk with those guys over at the Gelos office from time to time, we just, you know, they ask me technical stuff about the markets. Sometimes they want another, you know, view of how I see it. And then I'll ask them, you know, what they're doing and what they're thinking. And one of the smartest guys in the, I think one of the smartest guys in the office, who's ex, you know, Lehman trader, and, you know, he traded a Japanese bank, and I can't go with Nomura, I believe. Anyway, we were talking, and he's like, yeah, I'm a little worried about, you know, the upside risks in equities for the weekend. And then, you know, he's like, you know, he mentioned the Biden, they have a teleconference, I guess, on Monday. So, you know, they'll probably be talking climate change. But look, you know, I don't know about you guys, or I'm sure you guys have all seen this. Biden's his approval ratings are
lower
dismal.
than Trump's.
They are horrible. I mean, you know, I've always looked at Biden as more of a placeholder. He was like he's just a placeholder type of president, I guess. But man, his approval ratings are horrible, and I guess Kamala's are even worse. That's what Jane was saying in our chat room. But the fact of the matter is, if you look at the American consumer right now, what's the biggest fear? It's not jobs. You know, it's not.
You can always get a job anywhere now.
Yeah, you can get a job anywhere. It's not. It's really just inflation, I guess, is what I got to see. It's really inflation. That's it's on every consumer's mind right now. Prices moving higher. So Biden announced this week he's got a plan. He's gonna fight inflation with his, I forget what he was. You know, they coined him all these different plans or whatever. But the fact of the matter is, he wants to fight inflation. So how does he do that? Well, he is talking to President Xi in China on Monday. If I was short risk, I would be thinking this: what is he going to say to him? And maybe he's going to try to make things a little bit better. Maybe they're going to talk about some of their, you know, the you know, shipping concerns that they've had. How can they ease some of those pressures? How can they, you know, maybe ease some of the tariffs? You know, because of U.S.'s hard line over the last year, you know, or years, excuse me, and with the Trump presidency. So there's a lot of things that he may want to try to do with China going into this next week. And if you're short risk, you got to be thinking about that. Also, you know, regarding that as well, think about regarding inflation. Now, my buddy, that he was like, yeah, how about if Biden releases some oil reserves to you know, to you know,
For the Thanksgiving holiday.
Well, over Thanksgiving holiday, just to kind of relieve some of the pressures, energy, that's like something he could do immediately, right? And now you would think that that crude now, and I'm going to show you crude really quick. I mean, crude could really slip here. Where the hell is my crude? It's up here somewhere. Oh, there it is. So crude could really slip, and we're making lower highs. But imagine like they release some of the reserves over the weekend. Crude would slip right below $77, which is the massive breakout point, right? This is a continuous CFD of crude, so you can see it. If we break below $77, we'll probably see like low 70s again. And so if that happens, you would see stocks catch a bid. Right, everybody would be like, "Oh, look, inflationary pressures are going to ease a little bit, so stocks will bid up." Now, you could also, take.
Would you buy that dip?
I'm sorry.
Would you buy that dip in oil?
I would. I actually would. But first, what I would do is I would buy. I'd take the dollar out of the equation because you don't want to deal with the dollar, right? What I would do is I'd buy the Euro Canadian and I'd buy the Euro Norway is what I would do, or you could buy the Aussie Canadian would be probably the better trade, like you buy this, off of the support. Why? Because if crude oil goes down and risk appetite goes up, that means the Aussie is going to benefit. The Canadian dollar is going to weaken because crude is breaking down. So, that's what I would do is I'd play it right off of that support. I would just be long Aussie Canadian in a crude meltdown because, Biden decided to do something crazy. Or you can buy the Euro Canadian, which would be like another natural trade. But this is the one that I brought up. I don't know if I brought up yesterday here. I definitely brought it up on our private webinars, our Morning Edge webinar. For sure, I've talked about it there, or the daily roundup, one of those that we do for the ForexAnalytix subscribers alone. But I was looking for a move above 990 this week, and then now we're starting to get our head above there. Look, this is a false breakdown below the 127 or below the support, hit the 127% extension, descending channel. We could trade right back up here to 1050. So you want to play it. You want to play crude weak currently. You could play the Euro Norway long. So you just asked, Ryan, would I buy that dip? Hell yeah, I'd buy that dip. I think that you want to buy any dip in commodities, crude being one of them. I think that it's going to be continuously strong for quite some time. But would I want to buy it here? No, I'd rather buy it closer to the 200-day moving average near 70 if I can get it. Kind of like what you saw here. If I could get a move down like this, shaking all the longs out that were all targeting 100. Yeah, get them out of the market, right? How many people have got crude options just priced in for 100 over the next couple of months? Let them all get stopped out. Let us get close to the 200-day moving average, like right around here, and then I'd be long. All right. So what are your thoughts? Now I just dumped a bunch on you guys. Ryan, Stelios, Dale, anybody have any thoughts on things that I mentioned for over weekend risk? Sorry.
I'll be wary about
you are jumbling up. I'm sorry, Ryan. Yeah, you are jumbling up a little bit. Can you hear me now?
Yeah.
Can you hear me now?
No.
It's a commercial that
I like your last scenario play.
Ryan, go ahead. Yeah, I think we can hear you better now.
Yeah, I think an SPR move will be short-lived in the market. I think it's a mistake in the first place, because unless you're going to change your oil market fundamentally, you're not going to change the path of inflation or oil just by letting a few barrels out your stocks.
I'd agree with that.
So I think it's not going to affect inflation because it will just spike up again. If you get a decent dip in oil, I'll be looking at that to buy as well, just purely on that fact that it will come roaring back again. But talking of weekend risk, you've got that side of the US bid and then the China side, but I've been getting a little bit worried about what's going on in Belarus, with this migrant stuff, and not so much that, but it's, you got, 15,000 Polish armed forces along one side of the border. You've got Russia and Belarus now doing paratrooper drills, some 15, 20 kilometers from the the border. You got Russia flying over bombers. It's just, nothing may happen. Nothing will probably happen, but it's just one of these situations that's growing and escalating, and it only takes one little incident, and then it's all kicking off. And over the weekend, that'll hit markets hard if something like that goes in.
Yeah, Ryan, I was sitting there, and I know we were talking about this in our chat room. By the way, guys, for those of you that are not ForexAnalytix subscribers, so these are the conversations that we have like in the chat room when it's kind of slow. And you can see I posted a couple of charts this morning, and we were chatting back and forth. But these are like the conversations that we had. This has really been over the last hour and a half. You can see all these conversations that have been taking place just in the last hour and a half that I've been here. So, and that's just one of the chat rooms that we have. That's our general chat room. But, Dominic had brought up the whole situation. And my rebuttal to that was, well, as an American, and I'm not saying this because I'm a snobby American or because of American exceptionalism or anything like that. But as an American or anybody who's invested in the United States, in the US, in the stock market, my rebuttal to that is, why do I give a flying fudgesicle about that? Because is it going to affect U.S. equity markets? Now, again, this is not to sound like a jerk or anything like that, but in all actuality, is it going to affect U.S. equity markets? Because right now, the S&P is the benchmark for risk at this moment. Now, I don't want to dismiss the situation thinking that it's not relevant. I'm just playing devil's advocate here as an investor who has nowhere else to go, and is really just invested in the markets and balls to the wall, long S&P and Tesla and everything else that I've got to be long just to keep up with the rest of the rest of the world. So I don't get redemptions in my fund because I'm underinvested wherever, I have to beat the market. Do I really care about what's happening in Belarus? Again, this is devil's advocate. I'm not trying to be a jerk. I'm just trying to give you that point of view. What do you guys say to that? Like,
it depends what happens. If it's just a small incident, market has its ways of, taking a little shock and making it more than what it is, especially over a weekend. The problem with the weekend is that you can't trade it. You can't act on it right away.
Yeah.
So you get that initial hit. But if you want to take one view, who is it that if Putin gets involved with Belarus and, some incident involves Russia in that, who's he really prodding? Is he prodding Poland and Europe, or is he saying, here you are, Biden, I'm making waves over here. What are you going to do about it?
Yeah,
that's where the US connection comes in.
And Charles said it perfectly. Russia knows Biden will not do anything, and
disagree.
I don't disagree with that.
I do.
Really, right? That's
you do? What? Okay,
I
Dale.
do,
Let's hear it. What do you say that?
Okay, because I think a lot of people think Democrats in general are not hawks, and if you look at Biden's career, he's very hawkish, and I think part of the reason for his messy withdrawal from Afghanistan was he was worried about the other theaters, Eastern Europe and Asia. I think he would do something.
Hawkish as in taking action.
Yeah. I just wanted to make sure he pointed that out.
I wanted to say
for clarity.
I wanted to add one more thing. We have a kind of relatively recent event. Remember the annexation of Crimea? What did markets do then? Nothing.
They kept going up.
There was not even a blip. So I know it depends on the extent of what happens, but we look at the past, and I kind of tend to agree with Blake, but like Ryan said, it depends on what actually happens.
Okay.
At the end of the day, it's just we're traders, okay? We manage risk, we assess risk.
Right.
That's what it's all about. It's a risk event. That, whether it happens, whether nothing happens, whether Poland and Belarus nuke each other to smithereens and the market says meh, doesn't matter. As far as I'm concerned, it's a risk, and we put it in a pot and we make sure that our trades are not over, at risk of these entries. Just the same as Biden and the Z conversation. You're saying if you're sitting in risk off positions, you got to watch that. Yeah, 100%. We're traders. We assess risk. That's our job. However big or small that risk may be.
Yeah, but then that's where we go. Is it really that big of a risk? But I want to show you a couple of things, and let's. I know Steve just popped in, and Steve has been out most of the day, doing some things on the side here. So, Steve, did you have anything you wanted to add? And good morning to this conversation.
Good morning, good afternoon. Having to do with geopolitical risk, you mean, and Ukraine. Yeah, I agree with the last comment. I think the market won't care at all. And if they do, it's going to be extremely short-lived. So I don't think this is something that's going to be a market mover, no matter what. Okay. There is no chance, in my opinion, that there is going to be some kind of a generalized situation happening due to that. We've seen in Crimea before that nobody's actually willing to get involved, with Russia in trying to protect territories that don't really belong to them or whatever. I think we've gone past that point in time. So I really don't think this is going to matter at all.
Great.
So okay. How long ago was Crimea? How long ago was that?
2 years, 3. Well,
Crimea was February 2014. February 14th.
Oh my God! Yeah, so many years.
Yeah, wait! Somebody just said it was 2 years ago, and you said 2014. It was that long ago.
February 14, I think it was.
Yeah. Oh my!
This is one of
those. Time flies.
Why has he waited?
Time does fly. Holy cow!
Time flies. It seemed to me like 2 years ago.
Right. Well, hey, guy, I know any last comments regarding this? I want to move along a little bit because I want to. Go ahead.
Just quickly, you said there wasn't much market move. There was a bit of a market move when that plane got shot down over the Ukraine. Yeah. Remember that passenger plane?
Yeah.
That makes me want to have a shot.
That lasted all of 15 minutes, right?
Yeah, something like that.
Yeah,
I mean,
Ryan, I'm being a little stop you out.
What's that? Enough to stop you out. There you go. That's a great point. So I want to turn our attention to a couple other things. So Steve was on the morning edge. He takes over after I go through all the major currencies. So I go through, I basically go through and do top down analysis of all of these instruments, or we do it every morning with all of our ForexAnalytix subscribers. But after that, Steve takes over, and Steve was talking about copper, and copper has been on my radar. I've been talking to the guys at Pepperstone in Australia about this because Dr. Copper's look kind of ill. We were retesting this trend line. Steve was pointing out the 618 retracement, but I also want to point out we have lower highs, and I think we're I wouldn't be surprised if copper eventually broke through here, slipped, hit a new trend low, but we're just in a channel. We're not really like copper's more of a bigger, longer term consolidation in a very bullish trend versus a reversal, right? That's kind of like my view of copper. But the reason why I'm concerned about it right now is just because it's sitting on some pretty key support. Now, until I see copper start to break down, I'm not really too worried about risk. Another thing that I was looking at this morning, and I want to mention that in our chat room, the Forex Flow chat room, which Forex Flow is Ryan's old company. Ryan, it's Ryan's group. And Ryan joined forces with ForexAnalytix, so now we're all one big group. But he still has, or I say we all still have the Forex Flow chat room here. You can see it's right here. And this chat room is more of a lot of macro ideas fly around that chat room, much more than the general chat room, which is great. You get a kind of a little bit of combination of both. And Five Magics was talking about the move in the Euro CNH, and ironically, when I got up this morning, I was looking at the dollar CNH, and I'm like, oh, geez, here's the dollar CNH continuing to break down. We're hitting trend lows now. If the US dollar CNH is breaking down, the last thing I'm going to be doing right now is shorting risk, because when that CNH is strong, that tends to tell us that risk appetite is going to be at least stable. And, remember, this is a managed currency. So when China really is a little bit concerned, what they'll do is they'll start to weaken the renminbi or the yuan, and you'll start to see it rally, or start to see it sell off, or the dollar CNH will start to rally, for example. or what Five Magics was pointing out is the US dollar CNH as well, which has been an absolutely getting destroyed. So when you see the Euro CNH stabilize, it's kind of like the Euro Mexican peso as well. If you start to see that stabilize and bounce, that's usually a good risk off barometer. And he was just pointing out how damn weak this is. And this is another thing that keeps me very, very hesitant about being short risk. Now, if you are in the ForexAnalytix community, you guys already know last night I closed out all my dollar longs that I've been running for the last week and a half. But that doesn't mean that I'm not still bullish the dollar. I'm just, there's times to take profits, that you stay in your positions. But, everything that we've talked about today, does kind of, to me, suggest that that stocks could catch a bid going into Friday. I mean, remember, it is Friday. We've come off a week that's, kind of dribbled lower, but if you look at the S&P, we're still bullish. We're still above 46.25. Even with everything that's happened in China with the Evergrande defaulting on some loans, the S&P hasn't even touched the 46.25 level, and keep in mind, I still think that the stock market's, trying to top somewhere around here, but when you're talking about price action right now, I don't know if I'm necessarily bearish today. So do you guys have any thoughts here based on copper or CNH? Any thoughts on those?
Well, I put a chart up this morning because I'm long dollar CNH.
You are?
Do you want me to show that quickly?
Yeah, please do. Please do.
Let's give it a go. You guys getting that?
Yeah.
Yeah. So I've been trading off this big trend line here from 2014. It's a bit of a support area. We've got prior lows down there. I went long the first time we got down here, 37, 637 to 70. Knocked a bit out in the 640s. I'm sort of just trying to buy it on the dips and offload it above 640. But it's just edging under that line at the moment. And we've got obviously that prior low. Sort of 2020 low down there at 635. So technically I'm trading that, and it's been stuck. I've got the little inlay chart there, shorter term chart. It's been stuck in this sort of 38-41 range for the best part of a month, really. And that's, as I said the other day, that tends to insinuate that there's some official action to keep it stable. So this breakdown, it's a move, but it's not a big move yet. If we crack through that trend line and that 635 area, then perhaps we've got something moving and something's going on. But otherwise, if it sits in this range, I'm not quite yet ready to call anything big happening.
Okay. Well, I guess what you really want to see happen here, and I'm gonna just say it, just speak freely here. You want the market to shit the bed at this point, right? That would help you out, right? I mean, right?
We can all hope, but we don't trade hope.
All right. No, I'll take it back over from here. Yeah, Ryan, that's interesting that you're playing it like that. I didn't know. I'm going to start rooting for the market to go down for you then. No, but
cheers, man.
Look, I think there are some weekend risks that we are faced with. Let's talk about one last thing that we should mention before we go, because Dale, you don't have an interview today, right?
Correct.
All right. I hope you guys have really enjoyed having a little bit of elongated conversations with us. Just remember, we do private webinars with the ForexAnalytix community. And if, to be part of the ForexAnalytix community, it's only $1 for 10 days to try it out. We have a light version that's $14 a month that doesn't get you the chat room, but you can listen to
$19.
What did I say?
14.
Okay.
Oh, God, I don't know how that came out. Yeah, $19 a month. Sorry. But it's basically $20 a month, but you get, to listen to all the private webinars that we do throughout the course of the day. And, but anyway, try it out. When you try it out, you get the premium version. So just remember, you'll get the app. Well, you always get the app, but you get to be in the chat rooms, get the advanced analysis, that type of stuff. and everything basically. So go ahead and try it out. But let's talk about one last thing before we let everybody go. Today we have University of Michigan inflation expectations, and I want to talk to you guys a little bit about that because it's important. This is probably one of the more important pieces of data that we got this week. I know we got other inflationary data this week, but why is it so important today? And really on a survey of 5,000 people, why the hell do we care? The reason why we care is, well, first of all, everybody else is looking at it, but the other reason why we care is because this is the number one concern of American consumers. And the fact of the matter is, if inflation expectations are rising going into this week, going into this week, just if these numbers, the inflation expectations come in stronger than expected, once you start to see these numbers, rise, then you're going to have a problem, because then you start to get consumers that will start cutting out things to buy what they feel are necessities, whether it's, gassing up your car. What's crazy? Have you ever been one of those gas pumps where you literally put it in your gas tank, you pull the handle all the way back and it like dribbles out, and it's like, you could literally sit there for like, I don't know, 10 minutes trying to gas up your car and it just doesn't work. Well, anyway, I came into that situation, and what happened is I had to get to a soccer match, right? That was on the other side of town. This is on Wednesday for my son, and both my wife and I, and we're like, oh my God, we're running late. And I'm like, of course, I get one gas pump that really, it was pumping out just a couple of dollars worth of gas like every 60 seconds, and every minute was counting because I had to get my son there. He's the starting goalkeeper, so he had to be there at a certain time. So I'm like, screw it. After 5 minutes of gassing up the car, because I didn't want to cancel it, go to another gas pump all of these are taken, so I had to go get in another one. I put in $11 in gas, and then I drove because that's all that I could get in that short period of time. I drove across town, came back. That was $11 for me to drive across town and back because the gas was gone. So I tell you the story because as a consumer, I'm like, damn, that was $11 just to drive, just for an evening drive to go to a soccer game and back. For me, and I'm complaining as an American. As a European, it would be at least double that. So if I'm doing that, and I was going, oh my God, that was expensive. What are other consumers doing that live paycheck to paycheck, or, and they have to, they're faced with that question. Do I buy McDonald's or do I go to Target and buy that extra toothbrush holder that I thought was really pretty, or do I actually buy gas and food, necessities that I need? This is where the consumer is now starting to get pinched, in my opinion. And we are at that price. We always ask, like, where's that area where it starts to really affect the consumer? I think we're there. Do you guys have any thoughts on that?
Yeah, we were saying pretty much the other day after the CPI report, and central banks and what they do. At some point, prices will fix themselves, if you like, because the consumer will stop buying and firms will stop placing orders for stuff that's too expensive that they can't get hold of anyway. And, you'll get a natural reset. So that's coming. It's definitely coming. And, that's going to affect, again, as we've been saying previously, that's going to affect the economy because you're going to see a dip in activity. You're going to see GDP dropping back. But as long as the demand is still there, it's when you've got the money and don't spend it, and then when you want to buy something but can't afford it, that's where the problems arise, and that's when you got a fundamental weakness in an economy. So yeah, on that basis, I agree with you. But over here, you're lucky. $11. God, I'm going out at 3 o'clock in the morning and sucking petrol out the neighbours' cars. It's so expensive over here.
Yeah. I mean, look, that's like, are you going to really do that to your neighbors?
As long as I've got a pack of mints with
I'm
me.
glad I don't live next to you, man. All right. All right. So it looks like Stelios had a bolt. Steve, you have any thoughts about inflationary pressures that we're feeling? How's the consumer going to eat all this?
They won't. It's very simple. I mean, we've talked about it before. Inflation favors the people that own things with intrinsic value, and obviously that's not the person that goes from paycheck to paycheck, right? And destroys middle and lower income families. And central banks don't care about it because they can't even fathom the alternative, which is, to fix this problem now, they have to destroy the economy they've built, because the economy they've built is not, a real functioning economy. And since, they're not willing to do that, they're willing to let the other thing happen. And it's going to be very, very tough because, as always, salaries will not adjust. They will try to follow inflation higher, but, they always lag substantially.
Yeah. Well, I guess we're going to be finding out, but I want to say today, we're at least going to find out what the temperature of this consumer is. And so to make it real simple for you guys, if the number comes in a little weaker than expected, stocks and risk will rally. Dollar should sell off. Dollar Mexican peso is actually getting destroyed right now. I got out of mine this morning at 2070. It's at 2059. It's dropping at a pretty fast clip. Anyway, in the event that we have a higher University of Michigan inflation expectations number that comes out this morning, if it comes in hot, then I expect stocks to actually, or risk appetite to come off a little bit. And I think the dollar is going to rally as a result. So just a little heads up on how I'm feeling about that this morning. Guys, I want to thank you all for being part of ForexAnalytix, our community, being here every day, supporting us. If you're watching us on YouTube, make sure you give us a thumbs up, subscribe to the ForexAnalytix channel. We always appreciate it. Steve, I guess Stelios is gone. Steve, Ryan, Dale, thank you guys.
Thanks
for
you
a
guys.
great week.
Thank you, team. Adios, everyone. Have a great weekend. Friday's a great day to join. You have all weekend to navigate the platform. Give it a shot. If you peeled off some pips, shave off a little to join. And if you didn't peel off any pips, you probably need to peel off something to join even more so. So have a great weekend, everyone. Thanks, Blake, Ryan, Stel, Steve, the whole team, Amanda. Team keeps growing. Ryan and K-Man and Paulie, and I need a list now because I know I probably forgot somebody, and really think it's the best group of talented traders that care about how you guys do in the market. Have a great weekend. See you guys.
Thanks, Dale. Thanks for a great week. See you guys.
All right, buddy. Enjoy your weekend, Blake.
You too.
Everyone else, enjoy.